Folks, Brandon Chapman today. It's the Theo Night video on June 21st, 2021. I titled today's video Rock Meet Hard Place because that's about where we're at right now. Where's the market going in the next weeks to months? It's really interesting. You'll notice the very strong surge today, up 1.4%. I got the SPY up right now. But just wanted to kind of show this. Late last week, we on June 18th, on Friday, very large print around 417.12 that came through. That kind of provided a bit of a foundation. Then you got the top side here. One print for 1.1 million shares at 423.97. So we've got 424 on the upside, 417 on the downside. We're between a rock and a hard place right now, and we just happen to be sitting at about that 50% retracement of last week's sell-off. So, when we're trying to make decisions about where's the next stage of the market, we have to kind of understand is that ultimately we have to kind of weigh the market in terms of reward, right, to the upside and risk to the downside. And I think as you start to look at implied volatility, you realize that the upside is relatively minimal, maybe a little bit better in the near term right now compared to a week ago, but the bigger picture, the risk is to the downside. And how do we know that? Well, the first thing we look at is the VIX. The VIX is back down around 18 again. We're back down to that lower end of the range. What does that mean? It means there's not much expectation for future volatility. If you compare it to the last year, it's among the lower instances of volatility over the course of the last year. And we're going to get very close to testing 16 again if we get another update or two. And also of note is the reaction to the VIX as a result of last week's pullback. The VIX movement was very muted. Why? I use this term called delta comfortable all the time, meaning that there's been a tremendous amount of hedging that has already taken place. And as a function, there's not a lot of necessity to sell en masse, right? There's not a panic that's going on right now to sell, which basically tells you what? There's not a lot of direction to the market right now. There's not a strong reason why the market should suddenly surge and go up to like 480, right? But it may be very muddled like we've seen since the high on May 7th. We saw a similar reaction to the VIX, even less significant now versus then. And what happened? Yeah, we grinded it out to the high, but that was about it. We broke to a new high, but slightly before pulling back. What we're going to find is there's not going to be a lot of direction to the market right now. You look at the skew index. What does the skew index tell you? It did drop yesterday, so if we zoom in, you can kind of see that here at around 150. Well, we're just coming off virtually a record high last week at around 160, 150. This tells you you'll have a greater frequency of small up days with significant downside potential, meaning the tail of this skew distribution eventually will be realized. The only question is a matter of when. As with the VIX to 3M to VIX ratio, we're looking 30-day, ratio of 3-month to 30-day VIX. Yes, the ratio dropped last week to about 1.1. We never crossed below 1. This is the yellow line here. Why? We never saw back month volatility fall below front month volatility. We never got to that capitulative type of event that's normally marks major market bottoms, late October, for example, or January of this year. We came close to that in May, but not quite. Instead, we're ratcheting back up again. We have this threshold up here of 1.2, which tells you that there's a high expectation of future volatility. So any move higher right now or move lower in the 30-day VIX is going to result in what? Only building up of greater expectation of market volatility in the future. And then you start to look at interest rates. And I'm going to bring up TNX. I'm going to show you the a yield curve. And this is probably the most significant thing that came out of last week was what happened to the yield curve. And what you saw was the Fed blinked last week saying, hey, we may raise rates at some point in the future in the next year or two, maybe 50 basis points by the end of 2023. But look at what happened, right? The 30-year continued to decline. The 10-year declined a little bit, and the 5-year went up, and the 3-month went up slightly. The 2-year went up a bit more. What's happening right now is the Fed has more control over short-term interest rates, this is 3-month, than they do long-term interest rates. And what we saw was a material flattening of the yield curve last week, which basically tells you what? Inflation expectations are beginning to fall. And we can look at that as a ratio of TIP, that's Treasury Inflation Protected Securities, against a standard 7 to 10 year Treasury. So if we bring up this pairs ratio, what you'll see is that this ratio broke about a month ago, signaling what? Inflation expectations are starting to fall, which makes sense, in particular given what the Fed announced last week. So while we may not be calling for deflation, but the reality is inflationary forces are becoming more in question, which right now certainly puts greater price pressure on interest rate sensitive parts of the market. Now, if you notice today, financials were up the most, but they were one of the most battered last week, along with energy. There we go. Along with energy, which was the top performer today. The story for financials in a flattening yield curve is much more uncertain in terms of its future. But what's interesting is utilities today. So utilities were up about 1.3% after a pretty significant sell-off last Friday. Okay, so they succumbed to the general selling pressure. But guess what? On Friday, on XLU specifically, it was a 9 July 66 calls were bought. On VST, okay, this is another utility company, on Friday, the July 18s were bought. And then NRG, this is on Friday, in the midst of the selling before today's rally in utilities. It was a SEP 42, which is out of the money up here. We saw bullish interest come into utilities, and guess what? It was back today, for example. So we look at XLU, we'll look at a 30 July expiration, and you'll notice right here at the 66 strike, okay? Sorry, July, 30 July, and it was probably rolled from a July in here, 68 strike. So anyway, closing out some, rolling it out and down to a 66. And if we scroll down to the bottom under today's option statistics, you'll see some of this stuff going on, right? 16 July sold, 30 July 2166 likely bought. And so what you're seeing is that we're seeing building of bullish interest in utilities at the same time as we're seeing some uncertainty building as a result of the flattening of the yield curve. That story makes sense. Weakness in financials. Again, the bounce back today is probably just, again, short covering after a pretty big sell-off last week. Now, energy is where it gets a little bit more interesting with the news out of Iran, for example, the production story, the very tenuous point we find ourselves in with supply standing below the 5-year range and production down. Oil prices surged today about 2.48%. And not only that, what you saw on the back end of that was a lot of option trading and buying, for example, in energy specifically. Some of these names, Devon, for example, was up 6.92% today. Now, there are a couple of large trades placed on Devon. What you'll notice is that it's not for the next couple of weeks. This is out. So while there could be some near-term price bullishness, there is this larger issue looming, right, of a major sell-off. And so a lot of the stuff that we're seeing in energy coming in may provide some near-term punch, but ultimately, too, they're reaching out there a little ways to hedge their bets in case we do see more of a correction in the near term. But energy is probably one of the few areas of the market that does have potentially substantial upside given the current market conditions, assuming the oil prices remain stable, if not rising. So Devon, for example, you notice here the 28 and 38. So this is an upside January 22 call spread, buying the 28, selling the 38, basically anticipating Devon might be at 38 bucks by the beginning parts of next year. Again, similarly, a 35 and 40 placed in here. Again, reaching out, really cheap, high reward, low risk trades, anticipating that Devon will be higher and potentially significantly higher by the beginning of next year. And you back this out, that doesn't even really get it back to where it was, for example, in 2018. So if energy prices can remain high and these companies have become more efficient cutting costs and they begin to start to produce a little bit more, they may be in a very, very good spot. Another one is FANG, for example. So FANG today, if we go to the trade tab, again, see where we're at right now, right? We're not even back to Back to the trade tab here. We look at the December expiration, and you'll notice upside call spreads. This one for a 90 and for 130, and then another one for 115 and 135. Again, this is December. This is pointing to the end of the year. But what they're indicating here is upwards of 135 and 130. So getting us back to the 2018, end of 2018 highs. Can you back it out further? You want that's been the highs over the last many years. Again, are they this well off right now because of the cost cutting, the ability to raise debt and become well capitalized, and oil prices remaining fairly high at close to $75? XOP is another one. As we look at XOP here, you'll notice again we're fairly low to compare to where we've been historically. But we look at the trade tab. There's been a couple of big trades. On Friday, it was a July 95. Today, it is a July, and we'll scroll down here at 115. 23,000 contracts traded against 2,200 open interest. Again, you're seeing that most of that's likely call option buying. Again, you can test some of that by coming down and looking at option time and sales. And notice here in one print, that's a 16 July 115 bought for 1900. But again, as you continue to dig in here, what you'll notice is that, again, there's that 115 right there. Most of it bought in one print, 19,000 contracts at 39 cents. That's not a retail trader coming in. That's big money coming in, anticipating some upside. Low risk, high reward is the theme here, right? And so again, that kind of rounds out our MRO as well. So let's bring up MRO. MRO, it was the January 13th. So again, let's look where we're at right now, right? 13 is about at the money. This is one that's been on and off my top-down Friday watch list. Maybe it's time to put it back on. I don't know. But the point is, with regards to MRO, it was a January expiration. So very consistent theme here. This one's a little bit more at the money at 13. So again, these are not necessarily driving stuff in the near term, other than it's reflecting a general theme that people are getting a little more bullish right now, but looking at a lot of these stocks getting back to multi-year highs by the end of this year and the first month of next year. Something to pay attention to, an opportunity for near-term potential in some of those names. Another area that was kind of building today is starting to build a little bit in the ag space. So ag got hit last week, but again, we're dealing with a drought. Prices of Mosaic, for example, dropped from 38 down to 30, well over 20%. And we saw last Wednesday some interest come in at the July 35. And then today in Mosaic, it was a 9 July expiration and out here at the 33.50 call option. So basically looking for near-term upside. We're not even expecting to get back to the prior high. 33.50 puts it right in here, which is probably about a 1/3 retracement to 1/2 of the prior uptrend. So about 1/2 retracement. That's not unusual to see it make back half of what it lost, but that does provide a decent reward to risk trade in the near term. Another one to kind of match with this is Nutrien. Nutrien caught a bid today. It's one we added to my top down Friday watch list today, looking at $65, being a little more aggressive with it. But on Nutrien, it was a July 62 strike price right about here, similarly around that 50% retracement of the sell-off last week. CF, while it doesn't have any necessarily significant option activity, did make a bit of a move today. You can look at Intrepid Potash as well. Made a nice, caught a bid and a higher low off the June 15 low compared to May 20th. So maybe we'll catch a slight bid here in ag. So if you're looking for a place for a near-term potential strength, this is one area to look at it at, an XLI as well. XLI caught a bid today. It was a September 103. Again, we're not resetting things, right? We're between a rock and a hard place. Really hard for these to get back and take out new highs, maybe with the exception of energy, but you got to have a little bit longer view. But for some of these, it's just getting back to kind of the midpoint of the last couple of weeks sell-off here for many of these names. And finally, we're going to wrap up with Xerox. Xerox is one that's had some significant activity. This is the second time over the last couple of weeks. The other was about 2 weeks ago. Xerox, while not super compelling fundamentally, I mean, you look into here and you see, wow, Here's a company that, it's got a little bit of growth to its earnings going on, virtually no expectations of revenue growth. The company's missed analyst estimates in 2 of the last 3 or 4 quarters after having some significant beats late last year. You'll notice here in terms of the current year expectations from earnings, it's pretty well flat to declining. Big cut there, nice cut there, and it's been pretty flat for the last 30 days. But what you may notice is this transition over here from really being kind of hold, underperform, sell to really seeing a bigger representation on the buy and strong buy in the last month. So there has been a little bit of a turning here. The company has announced some acquisitions. One was Document Systems here. They're looking to serve small and medium-sized businesses. And again, maybe there's a niche they're trying to carve out here. We're not seeing that optimism really translate to earnings, maybe on the recommendation trends, but we're definitely not seeing it from an earnings front. So the company does pay a pretty significant dividend. It's around 4.2%. And you look at this from a bigger picture, longer term perspective, it's down quite a bit. We did hit the 50% retracement from the sell off on COVID. Maybe there's some near term upside here to around 29. Maybe it can get back to 38. So again, it seems like one of those companies that may have some near term strength, but at least you're getting the dividend. If it does nothing for a little while, maybe it slowly meanders towards 30 or possibly 38. But when you're getting paid 4% in terms of yield, sometimes you can wait it out and collect the dividend while the stock's trying to move. So we'll see how things play out going forward here. The cyclicals really took technology, communications, really kind of brought up the rear here today. And so again, I think that we're probably going to see more strength in utilities, maybe some areas of staples, and energy may be on that list. We're looking for maybe gold and gold stocks to maybe starting to make a turn. There was some bullish action in silver today, but I'm not sure I really trust it quite yet, but it's early in the game. It's something we'll be looking forward to throughout the week. And we got a little over time here. Again, it's Brandon Chapman. It's the Monday Theo Night video, June 21st, 2021. Again, we'll see you back tomorrow.